The July sales numbers are in, and volume is down about 40% from the peak. Hello, everyone. Welcome back to the Vancouver Life Real Estate Podcast and YouTube channel. The July sales data is largely in as we are recording this on Friday, July the 30th. And the sales are about 3,380, which is down 40% from our peak seen in March of about 5,700 homes sold. This downward trend has obviously been going since March, or at least since April. And while that's a bit of a trend and not too surprising, knowing that we are here in the summer months, people have started to not think about real estate for the first time in a long time. The real data and the real info to pay attention to is that we're only 4,500 new listings this month, which is about the lowest July in 20 years. So while sales are slowing, inventory is really slowing, and that's going to keep things propped up. Inventory now is left at about 10,800 homes, which is down from a year ago, about 19%. Really low baseline that we were coming off of. And now here we are even lower. The last time inventory was this low was just back in March, which coincidentally was that peak. So if the inventory numbers were where they were in the frenzy and they're back here now, it's going to make for a very potentially interesting winter or fall market. One way to look at it, of course, is the months of inventory. Right now, GVRD is sitting about 3.3 months of inventory. This is going to mean, like I said, prices are likely going to stabilize. We are going to see a dip, but do not expect like a 10% drop prior to the fall market. Looking more nationally now, even tighter market. There's only 2.2 months of inventory across Canada. And this is up only from March, which had 1.9 months of inventory. So things are still super tight nationally, especially in Ontario, where there's only 1.1 months of inventory in the province. It's just incredibly tight. There's nothing on the market there. And it's resulting in some extreme price appreciation. You look to a place like Bancroft, Ontario. If you don't know where it is, I didn't. I had to Google it. It's about a 3-hour drive northeast of Toronto. They saw a 64% price increase from 1 year ago. 64%. That is the highest in Canada right now. So, speaking of 20-year lows, nationally, the Canadian inventory is at a 20-year low. To give you some more recent insight, 2015 in Canada saw 250,000 listings active. We're now less than half that at 120,000 homes available for sale in Canada. And in BC, I think we're the lowest in 12 years right now, overall inventory. Inventory peaked in 2010 at 54,000 units provincially, now sitting at 23,000. So things are tight across the province and across the country. So to new housing now. Will new housing that's on a great pace kind of help with these prices and these inventory issues that we're in right now? So we are at about 261,000 housing starts in this past year. And this is the highest in 40 years. So great, here comes some inventory, right? Like there's about 320,000 homes under construction today. Most of these, however, are dedicated to rental housing. 60% of it is 60% of what's being built today is rental housing. The question then becomes, being the highest in 40 years, are developers overbuilding? The short answer is no. The unsold inventory is actually plunging. It's less than half of what it was just 2 years ago and is currently on a downward trajectory. Let's take a quick shift over to the mortgage credit space. June, because the data takes a little while to compile, June was the biggest mortgage application month ever for Canada. And the last 3 business days of June and first business day of July represented the 4 biggest days of new mortgage funding in the history of Canada. Let that sink in. Do keep in mind, of course, too, that purchases happen on average 60 days after the approval. And with people like a mortgage colleague of mine who just said that in the month of July, she had more applicants than she's ever had in her entire 23-year career. What does this say? What does this tell you about what's going to happen next? People that are applying for mortgages now are going to be buying in an average of 2 more months. 2 months from now is September and a fall market and tight inventory. It kind of feels like we're going to be up for another perfect storm here. I have been telling my buyer clients that they should likely see a nice little opportunity here in July and August when they can, probably buy some homes, not being in multiples, not being as competitive, and having more choice. I was a little bit off there. The choice part for sure is tight. Any nice new well-priced home that hits the market is getting a lot of attention because there's simply not much out there. 20-year lows in inventory. Very bizarre time to list generally in the height of summer, yet we're seeing people do it and we are seeing some homes sell very quickly. It is spotty. Some homes will sit for 3 months. Some will sell in multiples in 3 days. But either way you look at it, tight inventory and a lot of credit being issued right now. I think we're going to see a very high volume fall market starting in September. Thing to keep in mind too, though, check this number out. The share of new mortgages with loan to income ratios in excess of 450% hit new highs, sitting around 21%. So 1/5 of the mortgages that are being issued right now have loan to income ratios in excess of 450%. This surpasses the last peak, which happened in 2016, 2017, where it hit 19%, and we're at 21 now. What does that all mean? It means people are preparing to put themselves into even further debt. How risky is that? Well, in today's market, let's have a quick look at a consumer credit check. Overall, Canadians are in great shape. What do I mean by that? Insolvencies are down 40% since January 2020. And there is just an absolute ton of savings. People's bank accounts are getting fatter and fatter every month, up another 1.2% in the month of May alone. There's now $120 billion in extra savings in Canadians' bank accounts than there was before the pandemic. Also, Q1 of 2021 saw $11 billion go towards unscheduled mortgage paydowns. People are paying down their mortgages quicker than they ever have because of all this excess cash, leaving them with obviously a lot more equity in their properties. And this one too is very important to hear. Credit card delinquencies just hit their lowest rate on record, 1.3%. Understandably, consumer confidence is at an all-time high, sitting around 66%. People are cash rich, they're house rich, they are paying down debts quicker than ever, and they're not insolvent. So people are feeling like spending again, and understandably they are. The demand for goods and services are surging, and businesses are hiring again. June saw 235,000 new jobs in Canada, beating the 195 expectations. 195,000, of course. And things look to get better. There are 35% more job postings today than there were pre-COVID. Where's the inflation? Yeah, I think, the hot item, the hot talk right now is about inflation. The numbers are coming in. They are obviously running hot, 3.5%. The States, I think, just came out and said they are running at 5% last month. BOC claiming it is transitionary and it's going to calm down again. And then also committing to more helicopter money. More stimulus is coming, right? The government just came out and announced that they are extending their wage income, rent subsidies, and all their basically stimulus programs up until October 23 this year. And who knows, they may extend it again. So for now, the inflation can has been kicked down the road even further. It still feels a bit like those roaring 20s we talked about. If you try to book a hotel, an Airbnb, anything kind of vacation related right now, you will see prices are radically inflated. We were thinking about booking our winter vacation, and it just feels like every hotel is just juicing people right now. It feels like prices are up 30, 40% from what they were when we were looking at the same places just a couple of years ago. That's what it feels like out there. Thanks everybody so much for listening and watching this week. Both Ryan and I will be back next week with more information. And please, if you are enjoying this and finding some value in it, please leave some comments below, subscribe, follow us, and we will keep doing this for you guys because we think it is very important. Thanks so much. Have a great weekend.